Hello and welcome to Produce Talks, the CPMA podcast. On this episode, we head back to the trade show floor in Montreal for a live session from the Learning Lounge. The future of trade was the topic for this discussion as Dariel Trottier of the Star Group sits down with the Deputy Chief Economist at Export Development Canada, Dr. Stephen Tapp. Stephen provides insight on the new NAFTA, the efforts being made to remove barriers for product movement, and how Canadian businesses can capitalize on international trade opportunities. Enjoy.
Thanks for stopping the Learning Lounge. For the next little bit, we'll talk about global trade and what's going on with agriculture and produce.
Great. So why don't you just start off, and what do you do with EDC?
All right. So for those of you who don't know, EDC, Export Development Canada, we're Canada's export credit agency. So if people need a loan to grow their export business, they will potentially come to talk to EDC. If you have a contract you need to fulfill outside of Canada for the borders, there's accounts receivable insurance. So if people are wanting to make sure they get paid if somebody was to break a contract, we engage in financing and insurance. In addition to that side of the financial bank type thing, I do presentations on, where's the global economy going? That's something which I think people have been kind of a lot interested in recently. What's Donald Trump thinking on global trade is a question that we've been getting for the last, since the election of Donald Trump, I think, in the States. So that's what I do. My part of the job as Deputy Chief Economist, we engage in a forecast. So 4 times a year, we look around the world to the key markets, including China, India, Brazil, the U.S., and the European Union. So we do a kind of quarterly forecast. We look at the same frequency, we look at the export side. So how are Canadian exports doing by sector? So we look at the agriculture sector, we look at aerospace, we look at autos, we look at kind of detailed sector forecast. And then twice a year we do a survey. So there's 1,000 Canadian exporters in our survey, and twice a year we ask them, what are you thinking kind of going forward? The next 6 months, do you think that your export sales will pick up, stay the same, will they go down? We do some analysis of that. And we ask people questions like, do you think that there will be a deal in NAFTA? So try to get some sense of emerging issues. In the latest round, we're talking about China, about NAFTA, looking at the Canadian free trade agreement with the European Union. So we look at a variety of kind of emerging issues and try to get the pulse of what's happening and then kind of look ahead to where exporters see things going. And I brief our senior management on those types of issues, and then I manage our longer-term research program.
So what does your research tell us about exporters' performance relative to firms that only sell into Canada?
So for the folks here, I think in the produce and agriculture sector, people are pretty highly dependent on global trade for their growth. And I think it's not a surprise, but when we dig through the numbers, we have somebody right now who's working at StatsCan, and they have millions of observations of firms, and they're looking through how have the growth trajectories, how have the overall output of firms that are exporting, how does that compare to firms that don't export? When we look through our data, we see that exporters are more productive. So they produce more per worker. The results are pretty much, if you look over the work that we've done, or anybody else for that matter, for a variety of countries and long periods of time, exporters in Canada are about 13% more productive than non-exporters. So that's kind of 13% as an exporter advantage. Initially, people thought maybe this is just because exporters are bigger firms. So you got the bigger guys compared to smaller guys. But when we look at them and track them over time and see those who start exporting versus those that are the same size, same industries that carry on and aren't non-exporters, we see real changes in kind of the patterns of they will make investments. So they'll do some maybe changes in their organizational processes. Maybe they'll be investing in machinery equipment. And what that does is allow them to kind of increase their production and to grow faster. So I'd say the headline results from our work is that exporters do better. It's not just the big firms, but also for small firms. And because they do better, they make more money, they pay better wages. I think in general, we are kind of supportive of trade and hope that's something that people are considering doing.
I can see that from our side because we have had to make some major investments in some of the machinery that we want to do in the exports. But really, our optimum goal is that we're going to put the investment in the equipment to make sure that we're giving nothing but the premium product over to Asia because it's given us a better return back to the growers. So we try to make sure that we work forward and we're also working backwards. So making sure that return goes back to the growers. So good. Can you tell us why exporters do better?
So I mentioned a bit about that before in my last answer, but so the issue is kind of why exporters do better. You mentioned if you're in the business, when you start looking abroad and then you start to make those investments, when you are able to sell to bigger markets. So let's say you're producing, what do we got, cherries over there? You're producing 1,500 bushels. Then you start selling abroad. You start doubling the size of production. Your unit costs go down, so your production becomes cheaper. You're more competitive. That's a pretty obvious one. Economists call that economies of scale, but we certainly see the bigger firms do better. They're more price competitive. I talked about the investments that you said. So when people start interacting with foreign buyers, they get different questions from a buyer or supplier that they had before. They start kind of rethinking their business model, thinking, are the processes we have or the operations, is this working for us? Are there different ways that we can do this? If you're abroad, you need to meet, let's say, packaging or different labeling requirements or those kind of things. That can change the quality of what you do, and then that can have benefits for your domestic business. You're exposed to stronger competition abroad as well, so that is a bit more of a incentive and push for people to make those investments we talked about.
Yeah, you're definitely playing in a world economy. So we do see that as a company that we are under pressure from, even though we're selling Canadian product, we're up against Peru, we're up against some European countries, and then we're also up against just some local production, especially when we're going into China. So with the evidence of these benefits, why do so few Canadian businesses export?
That's a question that we get a lot. I think folks in the agriculture sector and in produce in particular, I think, as I mentioned before, many of them, aside from the supply management side of things, are in the game and are trading globally. So I think the benefits of those are pretty clear. But you think about doing business well is difficult to do. And when you do business across borders, it becomes a bit more difficult. So there are things to deal with, like tariffs. We can talk a bit more about tariffs, but tariffs are one thing on certain products where if you're selling into another market, you may be paying taxes essentially when you sell your goods there. Shipping and logistical issues, differences in time zones, things become a little bit more complicated when you're dealing abroad. The non-tariff barriers become an issue. So it's not just the tariff side of things, but I mentioned before, there's country of origin labeling, which is an issue. So where is your product from, and can you certify that it meets certain standards? In the produce side, that is something which is certainly testing and verifying that you meet a standard. As the canola issue is one now that we've seen where if other markets were looking to impose trade barriers in a non-tariff way, that's one way that we can see them. So I would say the benefits I mentioned are certainly there, but there's a little bit of increased costs there. But on net, I think we see that the benefits outweigh the costs.
There's a huge investment that both the grower and the marketer need to understand when you look at a lot of foreign markets. So for ourselves, we do a lot of blueberries, we do a lot of cherries, and we're also doing a lot of apples. So we have to do into the systems approach, we have to do trapping to make sure that all of our fields are pest-free. I'm not going to say pest-free, but there's various pests that they won't allow, so we have to do all the documentation. So in many cases for us, we see that to have this in place, we're anywhere between $1,000 and $3,000 an acre. So we're already adding on to those particular costs. So that we have to get more money for it. And then the next thing that you just raised is just the time differences. So we have 3 people on our team that do export. We have one that kind of looks into the European market, one that's going into, I have 2 people that are in the China market. When you're talking anywhere between an 8 and a 15-hour time difference, their days are starting at 8 p.m. at night. So meanwhile, they actually have to be in the morning because we got to find out all our phytosanitaries need to be getting done. So for about 8 to 9 weeks, our folks are working anywhere between 16 to 17 hours a day, 7 days a week. So it does take the right people when you get into the export produce business. That's just for those small windows that we have. So
it's interesting, like the one point that you make there in terms of the documentation side. So it's what we see when we look at the research. Once you've gone through, so there's a large cost to jump into the game, right? So if you're domestic or you're not selling across provincial borders, you have certain standards. If you move across, you have other standards. Once you've made that leap and that investment, and you're able now to sell into Peru, then you can also sell into Indonesia, or you can sell it. So we do find a lot more movement where firms will have a bigger jump over that first hurdle, and then it's a little bit easier into multiple markets once they're in a market because they've learned the processes. They have people in place. So in terms of other languages that they need or people set up outside the country, I actually was working with somebody in Australia on a research paper before, and I thought, this is actually the most efficient thing I've ever done because he's essentially half a day ahead of me. He would write something, ships it back to me. While I'm sleeping, he's writing it, vice versa. So there are instances where it is harder to coordinate and making sure your phone is like, did we schedule the Skype call at the right time? That's kind of annoying, but at the same time, there are efficiencies can be had because people actually could be working 24 hours a day through multiple time zones.
You mentioned your role in the forecast. Can you tell us how the global trade environment is shaping up for 2019?
Can I get a check the time here? How am I doing? Because no, the reason I asked because the global trading environment and what's going on right now, I could probably talk for a long period of time. You probably don't care to hear all the details.
It's a hot topic right now.
But it's challenging. So the global trading system right now, I think, is as uncertain as it's ever been in terms of what policies are going to be implemented. A lot of this stems from, I mentioned Donald Trump, but there's a bigger push behind that, which is protectionism. Brexit is one of the things that's unfolding right now, but we've seen people coming into governments, such as on the Brexit side or in Trump, and their mandate is not explicitly what they want to do, but it's what they don't want to do, what they want to disassemble. You want to rip up a trade deal, as one example, where Trump said, NAFTA is the worst thing that's ever happened. Wanted to renegotiate that trade deal. The trade deal is different in several ways, but not all that radically different. And now it's the best thing that's ever been negotiated. So I think there's a lot of hyperbole. And if you follow like Andrew's on Twitter, if you follow what's happening in terms of Donald Trump's tweets, it's a lot of threats. So the idea really is to get uncertainty high. And if you're negotiating against another country, essentially, in terms of the way they see things, not zero sum. They're trying to make sure that uncertainty is high. The other parties are thinking, what kind of concessions are going to be given up for the other side to get? So I think you're seeing a lot of posturing right now. And so we get a lot of requests and questions on, and we talk about canola, we'll talk about everything else. But basically, there's a lot of uncertainty now in terms of, there's a walking broccoli head right now, if everyone wants to turn right there. That's pretty cool. Wonder what he thinks of Trump's trade policy.
We got a hot topic, and all of a sudden a broccoli runs in front of you.
But so I think when I look back to where things were in the global economy like 2 years ago, things were slow. And then in 2016, 2017, kind of things had built up. So the global economy had been slow from the recession for quite a long period of time. Things got better. And at the same time things were getting better, it was kind of more uncertain or more unlikely in terms of what was going to happen. And now we've seen, when we look through the indicators of the data that we track, 2018, things slowed down. So we're still in growth mode. Things are doing reasonably well. But growth is slower now than it was before. And looking into 2019, when we look ahead at, Andrew looks at purchasing management indexes, which are more, what are people buying now in anticipation of future demand? Those things are slowing down. We're seeing China slow down. We're seeing the European Union slow down. So things are, not precarious, but certainly growth is not as robust as it was 2 years ago. And I think had we not have had some of these trade tensions, some of this uncertainty about policy, which is causing some firms to, if they have an investment to make, they may be thinking twice about whether or not to do that right now. Particularly, the UK is one example where you see people have relocated factories from London, say, into the European Union market, onto the continent. In Canada, essentially what Trump was trying to do to some sense was get companies that were in Mexico or in Canada thinking about whether they would want to locate in the U.S. border to avoid these tariffs. So it's been a time of kind of, if you follow things closely, there's lots of noise and lots of things happening. But over the longer term, we've still seen the global economy doing well, and you have to kind of discount some of that because a lot of the threats and other things haven't really come to fruition.
Well, some of them have, especially with the tariffs that China and the U.S. were actually throwing on many of their products. I just found it interesting that from our small little industry, when we take a look at the produce industry, how actually small we are, and how large of a role that was actually playing when China and Trump were going this battle back and forth, and the tariffs that they was throwing on cherries, and he was throwing them on apples, and he was throwing them some other various commodities. And then all of a sudden we got into the same thing with throwing some mud at Mexico. And before you know it, they were starting to throw tariffs on apples. So, we're getting caught up in a lot of politics where I just find it interesting because we were such a small industry before, we were always overlooked. And now it seems like we're on the radar. So
that is the risk of when you get into kind of these tariff wars is what starts out as a move in the United States to impose tariffs on. So initially, we had solar panels, we had washing machines. These were relatively small impacts on very targeted measures. But then when they moved to steel aluminum, that was one where initially Canada, Mexico, the European Union were exempt from these tariffs through March. And then in June, through the kind of NAFTA negotiations that Trump was trying to extract more concessions, the tariffs came to us. Our retaliation was targeted mainly at steel aluminum products, but also other things. So the European Union fought back. They were hitting bourbon, they were hitting whiskey, they were looking at jeans, and also when you look at Republican-leaning states, farmers were getting hit a lot by this. But it wasn't the tariffs on steel aluminum in the states that were hitting them directly. It was the response of other countries that were trying to push back against this. So you do get this spiraling of one industry is hit and then eventually somebody else is pulled in, collateral damage, if you will.
So in your experience just with tariffs themselves, do they, as things start to settle down, do we actually see that some of these are removed, or we're so quick to put these tariffs on? Does it take years and years before we start to see some of the tariffs being removed?
I think it depends on the instance and what they're being, kind of what the motivation is for. So I would say that on the steel aluminum side, this was the interesting part about Trump is he's really using pretty arcane laws from the 1970s and invoking this idea that there's a national security concern about Canadian steel. So initially we got questions on that last March, so it's over a year ago. Will this hit Canada? Well, it's pretty obvious it won't, because there is no basis in common sense that there would be, we're very integrated in terms of those markets. But it was a loophole that was used, and so that kind of hit that market and spiraled. So I think that was being used in the NAFTA negotiations. The fact that we got a deal, but the deal has not passed into law in those three countries, means that they have remained on. Both Mexico and Canada have said publicly that they would like to remove those tariffs in order to pass the deal. So some of the things that we've seen on are temporary, and that's part of the hard part if you're a company, is if a tariff comes on in your industry, there is not a set expiry date, especially for the ones that Trump is using now on some of these national security concerns. So if you thought this tariff was going to be in place for 2 months, maybe you could divert shipments, or maybe you could just sort of do your profit margin, take a hit, but you get over it. Now, the real issue is this rolling continuum. People don't know, especially in the steel aluminum sector. Now the threat has moved on autos, where Trump initially said we were going to hit, Canadian cars are a big security concern, right? I mean, you don't want any car driving across that border and affecting the U.S. market. So we think that that's going to be used really in negotiations against Japan and against the European Union. Those are big car producing markets, and the United States will engage in negotiations with them bilaterally this year. So there is a worry that those things will amplify. But there also is a sense that with these moving horizons, when you get some kind of resolution, so between the U.S. and China, their president has come over. There is supposed to be a deal, but these, as I say, these things move along. If there is resolution of that, then the tariffs will likely come off. So there is an end date to some of these things, but again, if it's kind of being hung over people's heads as a threat. If Trump is no longer president, I think a lot of this stuff goes away. It's really the way he's playing the game, which is very different than what we had before. That's not a high five. That's a 5-minute. Okay.
We got 5 minutes. We throw it out there. Is there some questions that you would like to ask either one of us? If not, I can whistle.
Anybody? Yes, I think.
Hi. On Brexit in particular,
Can you speak a little bit closer? Yeah.
On Brexit in particular, how do you really separate out the, fact or fiction? I mean, both sides are so passionate. And as you read both sides, there seems to clearly be reasonable points on both sides. How do they kind of know really what's what and what really could happen either way?
Yeah, what's changed about our job is, so I did economics in school, didn't study a lot of politics, and a lot of the calls we need to make now in terms of the forward-looking part are political. So that's been a challenge for us, because we can look at the data. So on Brexit, we have just kind of recently looked at what would the impact be on Canadian companies if the Brexit was a hard Brexit. So if essentially on April 12th, we then go, the UK is out of the European Union, we can look at the impact of that on certain sectors based on what trade patterns are happening. That work is not that difficult to do, and people that are engaged in those sectors are aware where the tariff spikes could be from 0 to here. The hard part is really on the political side, following the day-to-day of what's happening in Parliament. With Theresa May has had 3 votes to try to get the Brexit package that she's negotiated with the European Union through, and the deadline, which was initially March 29th, has then been pushed out 2 weeks. Our best guess is that it's going to be pushed out even further. So I mean that's really the difficult part, is forecasting what the political outcome of that is really a difficult task.
But on strictly the economics, where does it land, or is it?
Well, the economics part, as I mentioned, is actually not that difficult to do. When you look at a variety of studies,
So which is better, or is there not better? It's just going to be different.
The UK is unilaterally made worse off in any instance, because they are essentially starting to impose barriers on trade when there were no barriers before they had the common market with the EU. So I think it's pretty clear what we've seen. Their exchange rate depreciated by about 15% after the vote, and most estimates suggest that things will be worse. Medication will be more expensive that's being shipped in. Trucks will be stopped. So there's really no doubt about whether it's economically better or worse. It's clearly worse. The issue that they have in mind is more this sovereignty question of, if you don't want people in Brussels deciding whether immigrants are coming in across your border, then you want to take that decision back domestically. It's the package of what else comes with that. So I said it's the politics is difficult, but the economic stuff that we've seen is relatively easy. On the tariffs, we've seen tariffs come in, and we look at the prices of goods and services, and they've gone up almost immediately after the price changes, and people are selling less. So the law of supply and demand still works, but it's the politics which is giving us some learning experiences.
Any other questions? I guess I have one. And just with what's been transpired over the last, I'm going to say 48 hours, with the threat of Trump closing down the Mexican border, what type of effect would that have on us? I mean, we do a lot of trading between our two countries, and what happens?
Well, I thank you for that question, because that question's probably the next question we're going to get from senior management, and getting me start thinking about this in the spot. There are certainly a lot of produce that's shipped across the border and going to Mexico. We're reliant upon workers in the temporary foreign worker program, and if that border went up there and prevented that would be. There are a lot of labor shortages in the sector already, so that would make things worse. It would increase the cost of production. It would be more expensive to produce things in Canada. You would probably see a movement in the peso, so exchange rate movements would change. That would affect the ability to buy and sell service across the border. So it certainly would be something which is, for if you're shipping something and you're stuck at the border and you're in a perishable business, you've got to find alternate markets relatively quickly and need a plan A, B, and C. So it's a difficult situation. We have seen firms planning, more or less scenario planning, in a variety of industries now when they weren't doing that before. So I think it makes life more difficult, and certainly isn't helpful. And I think it's likely to be one of those Trump threats that is held over and eventually goes away. But the longer it's there, the more problematic that is for the industry.
Yeah, especially when you have all of that fresh product that has to go somewhere. And unfortunately, it just can't sit there.
I like my avocados, so yeah. I really hope that border doesn't.
Is anything else? We're getting the wave. I think we're all done here.
Giving us the sign that we have said enough.
Yes. So thank you very much.
All there is to say about trade, and it's now time to move on to something more exciting than trade.
Great. Thank you.
A big thank you to Dr. Stephen Tapp for your insights, and to Dariel Trottier for hosting this Learning Lounge. And thank you all for listening. Until next time, fill half your plate with fruits and veggies, continue to seek out new knowledge, and basically never stop growing.